Hi guys, and welcome to Crypto Bull Run, where we talk about the latest and hottest crypto news. Like, subscribe and hit the notification bell to be the first to hear about them. Today we'll be talking about Ethereum and how it hit its all-time high. Do you think it can go even higher than it did? Tell me what you think in the comments below. So, the first news for today is Ethereum hits $2.6 thousand all-time high as Bitcoin market dominance falls below 50%. Altcoins begin to deliver gains on Thursday while Bitcoin stays down, bringing its market cap dominance below 50%. Ethereum, the largest altcoin by market capitalization, hits new all-time highs on April 22nd despite a bearish phase sweeping through Bitcoin and other cryptocurrencies. Ether's price claims new record. Cointelegraph Market Pro and TradingView showed Ethereum to USD hitting $2,600 on April 22nd for the first time, on the back of 9.2 daily gains. Against Bitcoin, Ether was also on fire, hitting 0.047, its highest since August 2018. The second largest cryptocurrency increasingly stood out against the rest of the day, as Bitcoin continued to consolidate lower and other altcoins suffered from a painful knock-on effect. Analysts and investors, already buoyed by the previous action from this year's alt season, were thus firmly bullish on the near-term prospects. To be brutally honest, I stare at the chart of Ethereum Bitcoin and I see an enormous rounded bottom with a potential huge breakout just above, Real Vision CEO Raoul Pal told Twitter following in a series of posts. When you price anything up in DeFi, NFT, community tokens, or even metaverse worlds, everything is basically priced in Ethereum, including designers' time, etc. Ethereum is rapidly becoming the currency of the digital world, and Bitcoin is the pristine collateral and base layer. Paul noted Ether's superior gains versus Bitcoin in recent times, part of a trend that has seen Ethereum to USD outperform by a considerable margin since the pit of the cross-asset price crash in March 2020. Fees are volatile as altcoins resurface from the dip. As Cointelegraph reported, altcoin's overall strength this month has already expressed itself in Bitcoin's dwindling market cap dominance, which dipped below 50% for the first time in almost 3 years. Such events tend to spark the most intense part of alt seasons, in which tokens see a rapid surge to a peak before cooling off. The latest Ethereum gains nonetheless came with a predictable payoff. Gas fees for sending transactions began to spike on the day, a timely reminder for those caught unaware during previous phases of the bull run. Other misgivings about the market's overall strength included a caution from professional traders based on the Ether's derivative signals. Other altcoins, meanwhile, were beginning to show signs of life at the time of writing, including Litecoin and Chainlink's Link, both up around 6.5%. So, as we can see, Ethereum is truly going to the moon, and it can probably hit the $3,000 and even higher in the very soon time. The second news for today would be Bitcoin whale watching. This metric, called the 2017 top, is now flashing red. While demand for Bitcoin remains high, current profit-taking behavior suggests that the market may be on the verge of turning bearish. After weeks of Bitcoin sell-offs, high net worth Bitcoin holders or whales are finally back to buying. Their buying activity not only picked up when Bitcoin's price broke out of the 2-month ascending triangle to new all-time highs, but has also stayed intact since the price crash on April 18th. Whales have come back to accumulate Bitcoin. Whales' continuous buying activity comes at a time when the number of addresses holding more than 1,000 Bitcoin has reached in a 4-month support line. This is probably not a coincidence, as the turnaround takes place at a time when profit-taking the market is close to its support line too. Current profit-taking behavior has followed a 7-month trend. The level at which profit-taking takes place can be derived from the adjusted spend output profit ratio, which measures the ratio between the price sold and the price paid for a coin while disregarding temporary coin movements within less than 1 hour. In other words, this ratio measures how much profit holders were sitting on in US dollars at the time they sold their coins. Since September 2020, profit-taking has continuously found positive support at higher levels. This suggests that wherever sell-offs have happened in the past 7 months, sellers have been comfortable not selling at a high profit level each time, compared to the previous sell-offs. However, this trend might eventually come to an end. But as we can see, everything is bullish, especially Ethereum. And Bitcoin, even though it did dip a bit, the whales are continuing buying it, which shows a confidence in the cryptocurrency and Bitcoin itself. And the third news for today will be Earth Day 2021, how the cryptocurrency is moving closer to going green. Despite what the critics might tell you, blockchain is greener than ever. It is as reliable as the changing of the seasons. Another year, another Earth Day, another misguided missive about crypto's outrageous energy consumption. Last week, the New York Times published a piece in the Climate and Environment that sought to remind readers of the astonishing environmental costs of cryptocurrency mining. It's a prime example of what's quickly becoming an editorial subgenre, including references to dubious research claiming that Bitcoin mining alone will push global warming above Paris Agreement levels, and perhaps most bafflingly, a misspelling of Ethereum. For those who believe in the transformative power and potential of blockchain, these often misguided or under-researched criticisms are difficult to take in, difficult primarily due to the rank hypocrisy from the critics. Many of those who argue that digital currencies are both superfluous and wasteful tend to overlook the impact of their own preferred mediums of exchange. Printing physical currency contributes mightily to rampant deforestation, but even worse, as historian Stuart Schrader has argued, the supremacy of the US dollar and its exorbitant privilege as the global reserve cryptocurrency is inseparably linked to the US military, perhaps the most environmentally destructive force on the planet. So, taking this into account and the rest of the article in itself, we can see that even though a lot of critics are usually saying that cryptocurrency mining in general is taking a lot of resources, and that is bad for the Earth itself, those very critics ignore the points of other means of monetary exchanges and monetary instruments such as fiat. So this is again implicating that cryptocurrency is definitely our future. So those were all the news for today. Please tell me what you think about them in the comments below, and I wish you a good day and see you in the next video. Bye bye.